I've been around in the crypto space for a little while now. This is actually my third bull cycle. And so I've lived through two other previous ones. And in both instances, unfortunately, I made the same mistake. Now, I've told myself this time I'm not going to repeat that mistake. And I want to apply some methodology to that end. I've put together a specific exit plan. And I'm going to break down that methodology specifically because we're going to have, of course, different exit plans. But I'd like to share the steps, and then you can apply that on your end as you see fit, as you see appropriate. And I'm not going to sugarcoat things either. Your portfolio most likely looks as red as mine does right now. But still, I want to talk about something else that's also important. And that's the fact that I think the markets will turn around again. They always do. The pattern is very reliable. It is very cyclical. And right now we're really in the weeds of, as you know, a lot of unfortunate geopolitical events. So towards the end of the year, or possibly now even early 2026, I think that's where we can anticipate the top. There are some arguments that suggest that just the structure temporally of the bull market has shifted now. But whether it's late 2025 or early 2026, it is to your advantage to have a solid exit plan. During a bull run, euphoria rules. It's easy in those circumstances to keep waiting for the top. Do not end up round tripping your bags. It is better to take profit too early than not take any profit at all. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. All the best of luck if you choose to invest. I genuinely wish you well. Just remember, I'm not a financial or investment advisor, which by extension means this video is not official financial or investment advice. Okay, let's start at number one, macro perspective. We'll zoom out a little bit here and talk about the different risk reward profiles that exist between trading and long-term investing. What do I mean by that? Let's take a closer look here. First of all, I assume that we all agree that you should take profits. However, on certain parts of your portfolio, the idea is that you should take profits more aggressively. And by that, I mean the trading part of your portfolio. With these profits, you have a couple of different options. You can roll them into your high convection long-term coins, let's say, or alternatively into fiat. Maybe Bitcoin, if you like. And that's because you don't need to manage your long-term investing side of your portfolio very actively. And so these are the coins that you would expect to be holding in 2 years' time, maybe in 3 years' time, maybe even further down the line, ideally even across various cycles. In other words, your risk profiles are different. And that has to be acknowledged. That has to play an important role in how you manage those profiles. So to begin with, I would suggest make sure your portfolio doesn't have too many coins. That's a common mistake. Instead, do your own research and make sure you have 6, 7, maybe 8 high conviction coins and stick to them. And if you have other coins that you're interested in, you may want to use them for trading. Like I just described, those are going to become the trading part of your portfolio. So start with cutting down your portfolio to begin with, and then after that, separate your long-term and your short-term coins. For number two here, I want to take a look at high conviction plays. At Altcoin Buzz, personally as well, we see RWA, real-world assets, and AI as the two most important sectors in crypto right now. So for us and for myself, those are high conviction plays. However, we also look at some L1s like SUI, SUI, Solana, SOL, Hedera, HBAR, Ondo Finance, ONDO, or Quant. This can be different for every person. Those are the ones that we're fond of. Maybe you prefer Ethereum, Ripple, XRP, or Cardano, ADA. That kind of depends. But putting some of the nuanced preferences aside, these coins do have a common denominator. That's the fact that they are big cap, blue chip projects. And like we've been saying, it seems to be a lot harder during this bull run to be very successful with small or low cap coins. And that's just a function of the fact that there are too many coins around. In 2021, you could buy a couple of small gems and maybe one or two would take off, maybe even do a 50x, maybe even a 100x. But that is just not the reality in 2025. It is not going to work, not as a strategy at least. If you remember meme coin mania, in 2025, for context, there are 7 million tokens that were listed in 5 Gecko Terminal. In 2021, this number was much lower, just over 400,000. And over 3.6 million coins have just died outright since 2021. That's 52.7%. So yeah, we all want that 100x, but it's a more realistic scenario to chase a 5x or a 10x. And in my opinion, and as I would argue, that's why you want to look at the big cap blue chip altcoins out there. Altcoins are up from April lows, but mostly non-trending. And people are getting antsy for when exactly alt season is finally going to start. But SUI really is one of the select few projects who are at the heart of the growth in the current cycle. It's quickly become one of the leading alts in this market and is up over 200% in the last 12 months. And there's good reason for that. SUI is killing it in all the big sectors it supports. Sectors like DeFi, where SUI nearly crossed $2 billion in TVL and is almost at $1.5 billion in record time. SUI has some of the fastest stablecoin growth of any chain, so people are using it for real transactions. Walrus is changing the game in decentralized data storage. Its token launch, WAL, was a big hit, while Seal and Nautilus are making things more secure and more private. And SUI Play 0x1 is coming very soon in September and is now officially sold out with 10,000 pre-orders. SUI even has a small but growing meme coin market if you're a meme coin lover, if that's your jam. Look, if you haven't used SUI yet, you really ought to give it a try, and you should also be following SUI's X account for all the latest information and updates. Check out our link in the description of this video for more information. All right, now I want to discuss the one that's been especially problematic for me, and that's the question of when to take profits and various risk control measures. And there's going to be some variety here. There's going to be different opinions on when exactly you ought to take profits. In one form or another, though, you have to make sure that that's what you're doing. I'm going to outline some numbers and some percentages here, but like I said, there is some wiggle room, so you can kind of think of these as guidelines. They are not set in stone. Each person has a different risk appetite, so that's just something to keep in mind. But generally speaking, and I would say this is good advice, once your coin is up 2.5 times, you may want to think about taking a 40% slice of profit. This should cover your initial investment, and then whatever happens next, even if it goes all the way to zero, you're not going to lose money on that particular trade. If it continues to go up, and hopefully it does, whatever asset it is we're talking about here, maybe it hits 4x or maybe 5x, that's when you'd want to take another 40% profit. Then you have 20% remaining. You keep that as a moon bag. And eventually, if it keeps going up, chances are that most projects won't. But if it's one of the lucky ones that you've chosen, you've done your due diligence, you've selected really a true winner. And if it hits 10%, then you can take the rest of it, the last 20% as profit. And as I just mentioned, you can play around with these numbers if you want, just use them as guidelines. However, I do encourage you to have a risk control measure plan in place. Have different strategies for different coins if you want. And what I mean by that, for example, is with low cap or risky assets, you can take some of those profits more aggressively if you want. You could also secure that initial investment earlier, for example. And then with higher caps, you can decide to wait longer maybe before you take profit. That's up to you, but they are inherently less risky. Just keep one thing in mind, whatever the specifics of your strategy may be. In one form or another, take profits. Personally speaking, this is where I faltered in the past. Diamond hands are a good thing, but if you have bags that you're holding across multiple cycles, that's not a good thing. That kind of defeats the purpose at that point. So I've really had to remind myself to take profits, and I'm trying to be better at that, just personally speaking, from my perspective. I have failed to have some of these methodological plans in place. That's something I want to make sure I do correctly this time around. And certainly I've taken some profits, but I haven't optimized my exits from that perspective, let's say. Also, something else you can do here is use a stop loss discipline. So if your project doesn't deliver, you may want to not hold on to it. It just may be best in some cases, and I know I'm generalizing here, but it may be best in some cases to cut your losses. You can sell and you can move on. There's no need to marry your bags here. You don't have to be emotionally invested in them. All right, now let's finally take a look at where you should roll your profits. Your first option could be stables, or possibly you may prefer fiat. At the end of the day, you also want to do some fun stuff with your profits, most likely. But your first option, I would say, is stablecoins. And you can keep part of your stables to buy back in the bear market. That's a market that's always going to be there at some point in the future. The period of bull run euphoria is pretty small at the end of the day. It's usually only a window of 2 or 3 months. So keep that in mind. Make sure to make the most out of those periods when they do come around. But I would argue that you also want to put part of your profits, at least some of them, back into Bitcoin. That's our and your store of value ultimately. And of course, to each their own. But personally, this is something, Bitcoin that is, that I view as really a long-term savings account. So always put some percentage, whatever they may be, but some percentage of your profits back into Bitcoin. And you can treat this as a dollar cost averaging strategy if you like, but a little bit ought to go back into BTC. Also keep in mind that once you need cash, you can borrow against your Bitcoin. Another option that's out there, it may not be for everybody, but is to explore BTCFI. Make your Bitcoin work for you. And depending on how much BTC you have, reality is that this could cover your living expenses, maybe your rent or a certain percentage of your lifestyle, whatever that may be. But a lot of chains out there offer this already. You can take a look at Solana or SUI, for example, if this is something that interests you. Most importantly, though, you have to make a plan before you hit the euphoria stage. You have to stick to that plan as well. If we're there, then the fact is it is too late to start planning. You're going to get carried away. And so you need to make sure that you have a plan in place that tells you when to take profit and what to do with that profit. It's also essential that you know what you're going to do with your profits. Again, you can rotate them into whatever, stablecoins, fiat, Bitcoin. Stable so you can buy back during the bear market, and fiat to enjoy your profit, BTC as a savings account. But again, and most importantly, whatever the plan may be, whatever subjective strategy you've concocted, you have to stick to it. That is how millionaires are made. You will regret round tripping your profits and not taking any profit. I've regretted it on a personal note for some of my bags, for sure. It is much better to take profit early than not at all. Nobody can predict the top at the end of the day. So again, early is better than not at all. You can check out our recent article here on altcoinbuzz.io. If you don't have an exit plan in place, this is one on our website that nicely complements this video and again, breaks down the methodology in a lot of detail. Let me know your thoughts about this. If you have a solid exit plan in place, let me know in the comments below, and also join our discussion both on X and Discord. You can find those links in the description below.